welcome again to Trading Psychology. This is my video on trading fear, where I'll be sharing some simple methods to manage our trading fear. Okay, I hope you enjoy the session. Now, to begin with, we need to understand what is trading psychology. Okay, trading psychology is important because we're dealing with the conscious and unconscious mind. The whole idea of understanding a person goes beyond just technical analysis and fundamental trading. Why? Because when we go into the trading world or in the market, most of the time it is the unconscious or the irrational behaviors that causes us not to be profitable, right? And this is an area of trading psychology that is not very much explored. So I like to cover trading psychology. It's actually my passion. And especially when we talk about trading fear, the psychology part is important because we're now tapping into the unconscious mind. Okay? Right. Now this is a two-part session, and tonight we'll be covering part one. Okay? So the question is, have you ever experienced trading fear? Okay? I hope you have, because most traders go through the fear. The truth is, all traders have been through trading fear of different shapes and sizes. Okay? In fact, I've personally spoken to some very experienced traders, not to mention successful traders, and they too admit that they're still going through or they get uncomfortable in trading, right? And I mean consistent profitable traders still become uncomfortable once in a while. Why? That's because we're just human beings, right? So here's something very important. I want you to make sure to write this down. We cannot get rid of our emotions, right? Just be clear. We cannot get rid of our trading emotions. Right? With that, let's start to talk about the different types of fear. Right. So trading fear. Trading fear should generally cover 4 types of fear. Okay. And I believe as traders, it will be one of these. The first thing is this fear of loss. Now, this is a classic problem because, and especially for traders who manage to blow their trading accounts, right? Because they've lost quite a bit of money due to the lack of experience. They felt like they can't afford to lose again. In fact, the idea of losing freaks them out. If you have experienced this before, then make sure that you are not alone make sure to know that you're not alone in this. Okay? Because most traders have lost some money before they became better at trading. On the other hand, sometimes the fear of loss may not necessarily just refer to loss of money. This can be applied to loss of confidence. Confidence in themselves. Confidence in knowing that they can make money. Okay? Or the fear of the loss of effectiveness in their trading. What does that mean? That means they've lost so many times that they don't know if their system works anymore. Okay? And sometimes it's just the loss of time. I've met with traders, I've personally coached with traders who have been trading for 5 or 6 or 8 years, and they're still not consistent. So they fear that they won't make it anymore because they don't have any more time. Right? Now, of course, I'm giving you some extreme examples here, but the point that I'm really trying to make is that we can't get rid of fear, so why not just deal with our emotions? Okay? Never just learn to appreciate that emotions is part of our daily or our personality. So instead of avoiding fear of loss, let's learn to manage it. Next, the fear of seeing your profits being watered away. Now, this is another problem that causes confusion among traders, especially if you're new to trading. Why? Because this is a complete opposite of cutting your losses and letting your profits run. In fact, this was rather confusing for me as well when I started. I always used to ask myself if I should take profit or should not. Sometimes, I even have the illusion that I will make more if I let it run. Well, I'll never know the answer really. So the question is, where do I take profit and where do I let my trade run? Okay, I'm sure this is very familiar to many traders. Next, the fear of missing out. This is a classic Apple U fan example. Right? The fear that you won't get a share of what's out there and you really want some of them. Okay? I use Apple iPhone as a perfect example because Apple fans fear that they can't get hold of a phone, so they decide to camp outside when a new product is launched. Right? They want to be the first one to get there. Now, if you bring this into the trading world, some of us actually glue ourselves in front of the screen so we can actually make sure that we take the next opportunity. Right? Why? Because we fear that if we don't take the next trade, there won't be any more trades out there. Okay? It gets worse, especially if we are communicating or chatting with our friends, our fellow traders. Imagine this, if you are trying to stay away from the charts and you've managed to stay away for the last 6 hours. All of a sudden, your trading buddy shouts out, "Hey, look, that's a good setup on the hourly chart." What do you think you'll be feeling? You feel you might be missing out again, right? So that's the fear of missing out. Next, the fear of being wrong is another classic challenge. And this is true especially amongst traders who are working professionals and they're trying to trade the market. Why? Because they're so used to following the rule books, following the guidelines, and following the textbook. And because of that, they have a tendency to want to make things perfect. The fear of being wrong has been a problem because of how we were brought up. Think about this. The last time you were in school, your teacher told you that you didn't get an A or you didn't get full marks. Why? Because you got the answer wrong. Can you see how this is a problem? We were taught differently. In fact, in the trading world, we actually need to first unlearn what we've learned in the past before we start to learn trading. Right? So the fear of being wrong doesn't make sense in the trading world because everything's based on probability. And there will be times where you will be wrong. So what do you do about it? So, in short, fear can cause people to freeze. It can cause frustration, and for some people, because they want to be right, they overanalyze. And for some of us, we have sleepless nights. So, fear is just one problem, but the knock-on effect can be in many directions. Unfortunately, this is a human nature, a human behavior, sorry, that cannot be removed. So what are you going to do about it? Okay. Trading fear causes frustration, pain, and regrets. Okay. Why? Like I said, because people become irrational. They don't really do what they would normally do under a normal situation or environment. They act differently. And people cannot understand why because they don't understand trading psychology. But there's more than just one type of trading emotion, right? Believe me, there are many more, and I'm going to give you some illustration of it. Okay? In fact, what are the emotions that we have, or what are the trading emotions that we have? Sometimes when we trade successfully, we become happy. When we see a really good setup, we can become excited, become tender because you you hear news on the market and you're not really sure what to do, become scared, angry, or sad. Now this picture here has been taken from Wikipedia to illustrate a normal human being's emotion. But then again, it can be applied in trading as well, isn't it? If you were to start off from the left, there's optimism. and then there's excitement and thrill. Okay, this is usually when people start making money and they feel that they're brilliant, right? Now the market is in the highest point, and it's also where there's highest risk. This is where people have euphoria. Now, as the market starts to slowly move downwards, they start asking themselves, oh, maybe they should be a long-term investor. They start going through anxiety. And as the market continues to go down, then they go into denial because they're not, they should have closed the market. They should have closed their position. And then they go through fear, desperation, before they start to panic because now market is really going down. Now this is the part where because they didn't close the market, it's capitulation. They ask themselves, oh, why would I make that mistake? Why did I not close my position? Right? They become despondent, and then at the bottom of the market, where there's highest potential for earning, they then, as the market goes up, and they forget to take the trade. As they continue to go higher, there's hope, there's relief, and then there's optimism again. Okay? This is a classic emotional cycle in the financial market. Okay? So the thing is, what we think our emotional state is when we trade is flat. However, what we actually go through when we trade is an emotional cycle, as shown on the right. This is beautiful. This is classic. This is beautiful thing, because a lot of people think that, especially when they start trading, they think that they'll be fine, but as they continue, it just gets worse. Okay, this is a piece of work done by Justin Mamis. It's very beautiful because he looks at trading emotion in even more complex dimension. Okay, you have market returning to confidence, and then people start to buy the dip before it hits enthusiasm. And as the market slowly start to go down, there you get subtle warning or overt warning, and this is where people are disbelief. Why? Because it's clear the market's going down, but they still can't accept it. Then there's panic before discouragement, and the war of worry starts because when the market starts to climb, they're not very sure if they should go higher or not. And then you have anxiety, aversion, denial, and so on and so forth. Right. Now, that's on fear. As you can see, so this diagram was taken from a medical world, and there's a lot of similarities. Trading fear or trading emotions or trading problems, it's what you see. That's the leaves on the tree. Okay, everything that's obvious is only on the surface. However, we always talk about root causes. What is the root cause of the problem? And these are things that are not seen because they're usually underneath the ground. Right? These are the root level. And if you don't fix the root level, you can't fix what you see. But the opposite is true. If you have trading issues and you don't solve the symptoms, then you can't actually trade consistently. So you need to work on both. And the real question is, what emotions do we want instead? Okay. Question for you guys. Do you know that the sun will rise again tomorrow? Some of you might think that, oh, this is a silly question, but if you think about it, it's not to me, because when you know that the sun will rise again tomorrow, you know there's certainty. There's certainty in the feeling. It's a feeling of certainty. And that's what I'm trying to share here. We want to try to build a trading personality that creates certainty in the trade. Whether you're winning or losing, it doesn't matter, but there is certainty. Okay. Right. It's supposed to be a plan break, but I think we can continue. So here's when things start to get more exciting. What are the causes of trading fear? Okay. Do you know? Okay, I'm going to break down trading fear into a variety of reasons. And if you think you have any questions, then make sure you share them with me. Okay? Historical events. Now, the events in front of us have no real meaning. But what I'm saying is, at any point in the past, between the day you were born until today, there would be something that had happened in the past that causes some form of emotion. Right? And we don't know what is it. Because everyone is different and we're not here to share. Well, I'm just going to give you some idea of how things work. Because something that happened in the past will cause you to have emotion and cause you to have memory. And that can actually lead back into when we trade. Okay, the most common mistake that traders have is what we call recency bias. Why? Because we tend to put a lot of weight on what we saw most recently. Right? It's like, oh, I've got a losing streak. I lost yesterday, I lost the day before, and I lost the day before that. Okay. Does that mean you will lose again on the next trade? We don't know, do we? Maybe it's another loss. Maybe it's another win. But that's besides the point because we don't know what's going to happen in the market. Okay. However, we know that if we have a trading edge, then the probability of winning is in our favor on the longer term. Okay. Do you remember just the diagram just now? When people were in denial after a version because they don't believe that the market is ready to go up. And with a strong resistance level, people will actually wonder if market will continue to go lower. Right? That's because the market has been gone from panic, from discouragement to wall of worry. So the most recent event is that market should continue to go down. But who knows? From this diagram, market just went up. Next, past emotion events. Now, as long as there's an emotional event, the human mind or the unconscious mind remembers it. There's a memory that's created. The problem is a lot of traders get stuck with non-constructive emotional memories. When you're stuck with phobia, for example, phobia for spiders, sometimes you just laugh at yourself because it's such a small thing, yet you're afraid of a spider. Now, I'm not saying right or wrong, but I'm just saying that the emotional memory that has happened in the past cause you to remain stuck. And you can't even explain why you're stuck. You're just stuck. Right? Because the unconscious mind has this memory that keeps the emotions, even though you don't really remember the event, but it keeps the emotion in the body. And whenever you see something similar, it triggers that memory. And you go through that again. Right? An example is a dog's bark. Now, sometimes kids love dogs, but I've seen kids who are so scared of dogs even though they've not been bitten. Right? Just because they've seen a very fierce or angry dog doesn't mean that the next dog is going to bite them. The problem for this kid is that they become locked in emotionally. It's a locked emotional memory. Like I mentioned just now, as long as there's a trigger point, that memory comes out again. Next, experiencing discomfort. Now, a lot of people go through discomfort. Why? Because they're so used to being in their own comfort zone, right? As you see in the screen, they play it safe. They're insecure. They procrastinate. They regret, and so on and so forth. That's what's happened in a comfort zone. Why? Because as soon as you go outside of your comfort zone, you're embracing the unknown. You become uncomfortable. Now, for some people who are used to going through discomfort, there is a sense of opportunity. Whereas for some, when they go outside of a comfort zone, they feel like they're going through a dark area. Just because it's unknown doesn't mean it's dark. And that actually triggers um, a trading fear. Okay? Now, there's this thing called the uncertainty gone wrong, right? Now, as far as we're concerned, right, especially myself, I do call myself a market speculator. Okay? I speculate in the market based on the probability. The problem is, when I speculate in the market, there is a pattern. There's a repeated pattern that I use. And after exploring this repeated pattern with multiple scenarios, I then know how to start projecting and predicting what's going to happen. I start moving from the right to the left. Right? The problem is, for people who are not familiar with the market, speculation can turn into gambling. Okay? Now, sometimes with the lack of experience and the lack of structure of what they're doing, the uncertainty goes wrong because it's something that they're not comfortable with anymore. Okay? Likewise, when complexity has gone wrong. Trading the market, it's meant to be kept simple. The problem is a lot of traders make it really complicated. How? They would add different things. They would, well, for some, they would add multiple indicators. They will have different rules, unnecessary rules. They make trading really complicated. So they've gone from the high to the low on the left. Again, from a clear, simple fact-based trading method where they can predict and project the next trade, they make it so complex that actually it's jungle. It's really like hunting in the forest now. So again, it becomes somewhat like a speculation. Okay. Now, lack of experience. Many traders start off by learning something basic. So it's what we call collection of information. Okay. With a lot of dots on the box on the left, there's a lot of dots and you start collecting things. And when you have enough information, you then start connecting the dots. So that's what we call knowledge, because sometimes some information is not useful, but we don't know, right? So you try to make sense of them. But until you have experience, you actually don't know what knowledge is useful, which information will be beneficial to you. And in fact, the 20/80 rule always applies. In the end, after some having relevant experience, you realize that you actually use or need small bits of information only. Okay, this is where when experience comes, you have conscious competency. People always start off with unconscious incompetency, but they end up with conscious competency. The other problem with traders is that they only focus on the problem. It's like the numbers behind you. Can you make sense of what's happening in there? It's difficult, isn't it? Because there's so many numbers going around. And the more you look at the numbers, the more you get confused because you can't find a pattern. Now, this is the problem that traders face, is that they feel that to move forward, they need to solve the problem. So the more they feel they need, the more they'll dig into the problem. Okay? And that ends up going in circles because it just goes nowhere. Now, active imagination. Traders with active imagination can be somewhat cause a bit of self-sabotage, maybe. Why? Because it's a question of, is the cup half full or half empty? Now, having active imagination can be good if you're a cup half full person. But then again, even having unreasonable optimism or unreasonable hope, that causes problems in trading as well. So most of the time, active imagination becomes unuseful or unresourceful. Why? Because the more you think about it, the more you don't need it. Remember that in trading, you're supposed to keep to just 20% of what you know, and then keep it really, really simple. You don't need most of the information. So just take what you have and just use it. Why be imaginative? Why be overly creative? Okay? You should be trading based on your edge, based on your facts, based on a checklist that has been proven. Not to come out with what you think the market is doing or what you feel the market is doing at that moment. And then there are unresourceful thoughts. What does that mean? That means some people just think too much. They think that, oh, I have this pattern. Scenario A might happen. Oh, but then maybe scenario B might happen. Or maybe scenario C might happen. So they'll self-talk their way either into overtrading or not trading at all. Right? Too many things on the mind confuses them. Sometimes these are due to conflicts of belief in your system as well. Because all of us grew up in an environment where people will have different opinions and ideas, and because the difference in opinions means that there are difference in belief systems. So what do you do about that? Right. Now, these unresourceful thoughts, or what self-talk, this pointless thinking. For some people, it drives the trader to then think about the worst, and they become fearful. How is it useful? Oh, it's not useful at all. Okay? And here is the most interesting part. With all the different causes of trading fear, some of us will have just one of them, but some of us will have a combination of them. And the thing is, sometimes you have a different collection, so a different permutation of what issues we had. Like some could be active imagination combined with lack of experience. Some would be making things too complex, combining with unresourceful thoughts. The combination could be endless, right? And the question is, which one are you? Or which collection of causes do you have? Okay. Maybe you just have one, maybe you don't have too many. I mean, it's something for you to take away and have a think. Which one is it? So here you go. Here are the summary of the causes. Okay, take a look, digest. I'll give you a few moments, and let me know if you've got specific questions on any specific causes. Feel free to share, and we can talk about it if you want. But I'll give you a few moments. No questions? Then I think we can end the session. Really? How can we? Okay. Um, so we will talk about. I'll be sharing methods to manage trading fear tomorrow. But today is more like understanding, having a clear understanding of the causes and the fear. So far, any questions on today's session? In tomorrow's session, I will cover at least 3 methods, which will, I believe, will create a lot more interaction and a lot more questions. But that's for tomorrow. Meanwhile, for today, I just want to be clear that you understand me so far. Okay, that's it, I guess. All right. Thank you very much. And if you do have any questions, do collect them, and we can go through that tomorrow. Okay? Thank you very much.